I look at it, we are at the end of a monetary era, as I have explained many times. And for an era to end, there has to be a lot of bad news, a lot of catalysts. And so we're getting one after the other. We're getting wars, we're getting commodity prices, we're getting horrible governments that are absolutely useless as governing their countries, whether it's in Europe or in North America. And we're getting high inflation, and of course debt exploding. We're near a debt crisis. We are in a debt crisis. Nobody has discovered it yet, and we will obviously have an asset crisis where most bubble assets will crash too. So all of this, wars, inflation, etc., debt, is part of the end of the monetary era. So it has to happen basically. So it doesn't change anything from my point of view as regards precious metals, of course. We are in a major bad trend in the currencies. The currencies have to finish their move to zero. They're down 99% in the last 50 years. So the last 1% is going to happen now in the next few years. It can take several years. We don't know, but it's happening. And of course, that will be reflected. That side will be reflected. Currencies going down, gold and silver and other commodities also going up. Now, they never go straight up. We've been in this market since $300 in a major way, since gold was $300. And it's not been a straight line. And it's unlikely to be a straight line towards the end now either. So therefore, we will see corrections. I mean, I will admit that this last correction was bigger than expected, but it doesn't change anything. I still believe that when it finishes, whether that's in a week's time or a few weeks' time, it doesn't matter. We're still going to go to new highs. And before this is over, gold and silver and many commodities, but especially gold and silver, will go up by multiples. So this correction, I've been through so many corrections for the last 25 years, and I've never worried about them, never sold anything. Our clients very seldom sell also. So we just ride it out and wait for the next problem to start in the world. It's so sad, really, that a lot of investors buy when it goes up and sell when it goes down. No, this is the psychology of investors. We bought gold 25 years ago, and we're still holding it, and we've added a lot since, and the same for our clients. So the gold is for long-term holding and for long-term wealth preservation, and it'll be a long time before the finances of the world's governments will actually be so sound that you don't need gold when there are no deficits, and when there are no debts, when there's no inflation, and we have stable governments. As I often say, that's the time when elephants will fly also, because it's not going to happen for a very long time. So that's why we have now a guaranteed road ahead of us where metals will continue to reflect the mess in the world. Nothing can change that, sadly. So yeah, just stay calm, buy when there are opportunities, when it's low. Don't sell at all in the next few years. This bull market or bear market in currencies, they could actually last another 10 years. Who knows? Again, it's not going to be a straight line. It'll go down suddenly and massively, and then it will stay at a lower level for a long time with a few corrections. I could see it, as I said, I could see this continuing for even up to 10 years, this market. But there will be major moves, obviously, in even the short term, in the next year or so, major moves in the metals. So there is plenty of time to also benefit in the medium term, but people should not look at gold as or silver as a short-term investment. Look at it as wealth preservation for the longer term. We had a 40-year downtrend in interest rates since the early 1980s, and they bottomed around 2020-21. Now, the uptrend is very clear, and this is not going to be a short-term uptrend, because again, this is, you combine this with the inflation we're looking at, with the money printing. High rates are inevitable here, and I think they're going to be as at least as high as in the 1970s, early 80s, which was in the high teens. If we get a collapse of the sovereign bond market in many nations, including the US, which is basically bankrupt, and I've just looked at some figures, with the balance sheet of the US they have assets of about $6 trillion, and they have liabilities of $45 trillion. But if you add to that unfunded liabilities, the total liabilities is $100 trillion against $6 trillion assets. The USA is bankrupt and insolvent. They are lucky still to be able to print money based on the dollar being a reserve currency. That's not going to last long because the end of this crisis will mean that currencies like the dollar, the euro, and many others will collapse. And the consequence of that is, of course, if they want to borrow money ever, they will have to issue bonds at rates of 20%, 25%, or even higher, and the market will also push them up to those levels. So we're entering a very, very precarious situation for the world economy here and the world financial system. And of course, we talk about inflation and oil and gas and commodity prices, but just you take, for example, fertilizers. Fertilizers a lot of fertilizers come from oil. A lot of fertilizers are also made come from Ukraine, and there's going to be a massive shortage of fertilizers, pushing food prices up dramatically. So you can think about, what we will face here and what ordinary people will face will high energy prices, high food prices, and of course, generally commodity prices going up dramatically in the next few years. It's going to be a disaster that will be hard for the world to cope with in an orderly fashion.
One of the things that Egon understood decades ago, frankly, decades before I understood it, is this debt risk that we were talking about earlier. When you talk about the gold price in US dollar terms, or certainly in euro terms, but all-time highs, we had 55 all-time highs in US dollar terms in 2025. I think it was up 60% against an S&P at 17%. I mean, gold clearly had a banner year. People think we're at peak gold. It's probably too expensive. And these gold guys from Switzerland are just selling their book. I get it. But it couldn't be further from the truth objectively. Again, get past, if you can, my bias and look at the numbers yourselves. Figure this out or examine it on your own, especially if you're thinking about gold as a preservation asset, not as a trade. If you're trying to get rich quick, going long or short, precious metals, good luck, especially with the forces against you. That's a very different mindset than trying to stay wealthy or not get poorer by this melting ice cube of paper money. But the key thesis that we've been talking about at von Greyerz, and I've been writing about for years, is that gold is not actually rising. What is not astounding is not that gold went from 2,500 to 5,500 in a very short amount of time. It's not that gold is rising. It's, again, the dollar from our debt discussion is falling. You have to understand, or people need to consider, that U.S. money supply, M2 money supply, during COVID went from 15 trillion to 21 trillion in a couple of years. It's like a 40% increase in a couple of years. And then after that went up another 30%. So when you look at the US gold price versus the money supply, that ratio of the money supply to the gold price is like 4.6. In the 1980s, it was as low as 2.5. And the money printing's here, and it's coming back with a vengeance. So just against the money supply, the gold is actually not overpriced. The scary thing is, it's not that gold, again, is getting too expensive. It's that the dollar or the fiat money is getting that much more debased. And I think if you can understand that distinction, it'll help you look at this more objectively. That doesn't mean, though, if you're an average citizen who wants to protect yourself, well, buying an ounce of gold at 5,000 or 5,500, and we can talk about why it's going to go higher. Not in a straight line. It's going to go significantly higher. Frankly, Trump wants gold to go higher. Besant wants to go higher, and we'll talk about that. But again, the gold price isn't becoming higher. It's the paper money beneath it that's getting weaker. And the proof of this isn't just because guys like us in Switzerland understand this, not just because we have selling our book motive. No, we saw this decades ago. If you look at just the last few years, especially since 2022, when we weaponized the dollar, which was already getting weaker, that gold is more than just an asset to trade or go long or short or speculate on. It's becoming the de facto primary reserve asset. It's the new FX reserve currency. Now that may sound like an exaggeration, but the FX reserve currency globally is 40% US dollar and 35% gold. But the bigger picture proof of this isn't just gold bug analysis from Zurich. Since 2014, as I said, the US Treasury has been net sold and gold has been